Hey guys, what's going on? It's Lewis here with Crypto Elite, and welcome to another market update video. There are a few things that I want to cover in this video, so I'm just going to get right to it. First off is I am updating my Crypto Mastery course, which is my trading and investing course. And so I'm making a lot of the slides for it right now and recording all the videos. This one is about market structure and order blocks. And you could see there are like a ton of slides regarding this. And what I want to do, if you could just see all of them, there's so many. And what I want to do is actually take a lot of this information and put it into these market update videos. So in this video, I'm going to do a little bit of a lesson on market structure. And in the next video, I'll do a little bit of a lesson on ranges. In the video after that, I'll do a little bit of a lesson on order blocks, breakers, etc., so that every single time you watch one of these market update videos, you could get a little bit of a lesson when it comes to technical analysis. So with saying that, let's do the lesson on market structure, and then we'll get into the market update. Okay, so here I have the Bitcoin chart on the monthly time frame, and this is going to be just a huge overview of market structure. So basically, market structure to me is one way to identify the trend. And the way to do that is by looking at the swing lows and the swing highs and then plotting them out and using that to determine what the trend is. Also, you can use the monthly closes or the weekly closes or the daily candle closes to determine whatever range you're looking at. But if we're just looking at the swings and we just look at the obvious swings, that usually gives us a good indication of the direction of the market. So this is the monthly chart on Bitcoin. And if I draw it out like this, you can see that we moved up from the bottom there, from the COVID lows. Then we had a move down, followed by a move up, followed by a move down, followed by a move up, followed by a move down, followed by a move up, followed by a move down, a move up, a move down, a move up, and now a move down. So within this, and just disregard, actually, I think I can delete these two. Perfect. Okay. So this right here is the general market structure on the monthly chart, just what it looks like from the obvious levels, right? And so a market structure market structure break occurs when the price makes a high, a low, and then a break of the previous high. This right here, this is a market structure break to the upside. So it is a bullish market structure break, okay? So what do we see? Where do we see that? We see that right here where we go and make a high, we make a higher low, and then boom, we break to the upside. So this right here is considered a bullish market structure break to the upside on the monthly chart. And then we came down and we had a retracement followed by an expansion up. So right here is the second bullish market structure break, because we are breaking new highs. So we're breaking into new bullish territory. So it's a bullish market structure break. Then we made a high, we made a higher low, and then even right here, we made a higher high, another higher high. So this right here, or if you want to just take it from the body, this right here is a bullish market structure break because it's a break of the highs, obviously to the upside, right? And so far, we've continually had bullish market structure break after bullish market structure break. And then to the downside over the last, since last year, since November, a bearish market structure break is when the price goes down and then comes up to make either an equal high or a lower high, and then comes back down again below the previous low. So where did that happen? Well, there's the high, there's the low, there's the high, and then boom, we have the market structure break right here where the price came below the previous low. So these are the basic bullish and bearish market structure breaks on the monthly chart. So what you need to know is that market structure happens on all of the different time frames. So we're on the monthly chart right now, and there was only, 1, 2, 3 bullish market structure breaks on the monthly, and there was only like one bearish market structure break on the monthly. But if we go down to the weekly chart, let's see if we can plot out more market structures and market structure breaks. So if we start off, I believe we started off at this low. So it looks like we made a high right here, followed by a consolidation or a base, followed by another rally, followed by a higher low, followed by a higher high, higher low, and it looks like the price did something like this. And so if we plot this out, and I'm only using the most obvious levels, right? I'm not like doing anything special here, okay? I'm literally just using the obvious levels that you could clearly see with your eyes, right? Okay, so now that we plotted this out, where's the bullish market structure breaks? Where does the price move up and break the higher high or break the high? So right here, we made a high, then we retraced a little bit and we broke that high. We made a higher high right there. So this is a bullish market structure break right over there. Then what happened is we retraced and then we followed that up with another move higher, and we had a second bullish market structure break right here once this price action moved above the previous high. Then we have another one right here where the price made a high, it retraced a little bit, and then boom, it made a higher high. So we have a market structure break right there, and then we made a low and then a higher high right here. So this is considered a bullish market structure break. And then we had a very small retrace followed by another break in the market structure. So this technically right here is a bullish market structure break. And then we finally made our first lower low. So if you take a look at these obvious levels and you look at the lows, you have a low, a higher 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 low, and then boom, we got our first lower low. So this could be the first inclination that maybe something is weary or something is, on the rye. Like you should have your spidey senses tingling when this happens, when we make our first lower low all the way since March 2020, and right here it was April 2021. So then after this, we actually made a lower high. So this was our first lower high. So you could see we made a high, we made a higher high, we made a higher high, we made a higher high, a higher high, a higher high for months and months and months and months and months. And then boom, we made our first lower high. And this came after making our first lower low. So then once this broke down, this right here is the first bearish market structure break that we've had. Why? Because a bearish market structure break is when we make a low and then we make a equal high or a lower high, and then boom, we make a lower low. So right here, we made a low, we made an equal or lower high, and then boom, we made a lower low. So this is a bearish market structure break. And additionally, the price came back up, made a lower high, and boom, came back down, made a lower low. So right here, the break of this low was a bearish market structure break. And then we came up, we came down, had a little bit of a retracement, and boom, came up again. So right here, this is a bullish market structure break. And then we made a higher high, retracement, and then another higher high. So this right here, this is another bullish market structure break. And you could take it from the wick, or I like to actually just take it from the body. That's what I prefer. And then we made a huge low, a lower high, a lower low. So this right here, market structure break to the downside. And then this right here actually became a market structure break to the upside. And then we just had this huge move down. And, it's sort of been, it has simply just formed a base since then. But you could see that there are more market structure breaks on the weekly than there are on the monthly. And so if we go down to the daily, if we just delete all of these, remove all these drawings, then we go down to the daily chart, maybe we could plot it out and see more market structure breaks. So this is the lesson for today. It's all about market structure and market structure breaks. So it's pretty much the same market structure as the weekly right here in this area, but there are a few more that I see. So we got this and these retracements right here. So let me just plot this out like this. And yeah, there was quite a few. Lots of chop on the daily, but still you could plot some of these things out like this if you really wanted to. And you could already see that on the daily time frame, there's a lot more market structure breaks on the daily time frame compared to the monthly, compared to the weekly. And of course, as you go into the lower and lower time frames, you get more market structure breaks. So we'll just do this one really quickly. We have a high, we have a low, we have a higher high. So right here, this is a market structure break to the upside. And if I'll bring this, make it a little bit more compact so you can see it. And then we have the low, we have another break to the upside. So this is another market structure break, a bullish market structure break to the upside. Then we have a retracement, a move up, a move down. This could have been, let's zoom in a little bit or zoom in a lot. Yeah, so this right here, this is a higher high. So this is a bullish market structure break right here. Then we retraced a little bit, came back up, made a new high. So this right there is a bullish market structure break, came back down, made a new high. This is a bullish market structure break, came down, made a lower high. This is our first lower high so far. And then we came down here, and this was actually a bearish market structure break because we made a low, a lower high, and then boom, we came back below this low and we made a bearish market structure break. And you could actually argue that this looks something like this. So I'll just plot this out, get rid of this really quickly. And so if we make it a little bit more detailed, we have the bearish market structure break when this came all the way down and broke below this low. And then we retraced a little bit, and then we had another bearish market structure break right here. And then eventually, though, we came up, and this move up surpassed this move right here, surpassed this high. And so this could be a bullish market structure break right here. And then we came down, and this, I actually need to say that we came down here for a little bit of a retrace before a move up. And in that case, this candle right here is the bullish market structure break. So going back to the bigger, just like more obvious market structure, we can see that we made a high, a low, a higher high. So right here, right here, another bullish market structure break. We had a retracement followed by a higher high. So this right here is a bullish market structure break, followed by a low, a lower low actually, a high, and then a break in the market structure. So this is a bearish market structure break. And hopefully going through all of these examples makes it pretty obvious what a bullish and a bearish market structure break is. We're looking for a high, a low, and then a break upward above the previous high for the bullish market structure break. And we are looking for a high, a low, a high, and then a break below the low for a bearish market structure break. And obviously there are a lot more bearish market structure breaks and bullish market structure breaks on the daily time frame than there are on the weekly or on the monthly. And if you go down into the 4 hour, there's going to be even more. If you go down to the daily, there's going to be even, the 1 hour, there's going to be even more. And the 15-minute, there's going to be even more. So what's the point of knowing about market structure breaks? That is a good question. Well, if you know about market structure breaks and the market structure in general, then what you could see is you could see that the price makes a bullish market structure over and over and over and over and over and over again until finally it creates something like this over here where it made a lower low and it broke the market structure. So right here, this example, it was in a bullish market trend and a bullish market structure since March 2020, and it's made higher highs, higher lows, higher highs, higher lows over and over and over again. And then finally right here, it made a lower low and then a lower high. So this is knowledge that you could use in your trading so that if you see something like this happening, you could say, oh, wait a minute, the market structure, it looks a little iffy right now. I probably shouldn't, be longing and gig-alonging right now. I should be, taking my profits or hedging my bets or being more conservative, et cetera, because the market structure has shifted. And then same thing down here. Down here we have a low, and then it sort of just consolidates. It just basically forms a base. But then as soon as we break above and we create this new market structure, we have this huge move up because it broke past the previous high. Well, now you could say, oh, well, you know what? We were going down, and then consolidated, and then we went down even further, and then boom, we went up and we broke the market structure to the upside. So now I want to be long biased. I want to have a long bias. And then you could also basically take the tops and create areas of interest that you can specifically look for market structure breaks on the lower time frames. So let's say that you're looking at this right here, right? And you see that we're basically just like going up, going down, going up, going down, going up. But overall, we're going up, obviously. We're in an uptrend, right? So we're in an uptrend. Where would you look to start taking profits? Where would you look for possible reversals? Well, you would look for possible reversals at the previous highs, right at the previous highs, right above the previous highs, and right below the previous highs. So basically this red box. And of course, this is what happened. The previous reversal happened at this red box. And so you could see this on the weekly time frame really well. And then if we go down to the daily time frame, you could see that here was the market structure shift. We had a low, we had a higher low, and higher highs. So it's just going up, 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 up. And then boom, we had the market structure shift to the downside. So this is very, very bearish. So now you know, oh, this bearish market structure break happened in this big resistance area of interest. So I want to look for shorts now because I should have a short bias because of the fact that we had the bearish market structure break. We had their first lower low all the way since back here. So low, higher low, and then all of a sudden we got a lower low for the first time. Well, now I want to be more bearish bias. And this happened in this area of resistance. So yeah, I definitely want to be more cautious here. And also, you could literally just say, well, this is a huge support area right here. This whole area is pretty much support, right? So let me just make this green. So what you could do is you could say, if the price comes back down into this area, I'm going to look for market structure shifts to the upside, market structure reversals from the bearish trend to the bullish trend. And I'm going to look for them on the lower time frames within this area. And then this will tell me whether or not I should get long or not. So for instance, this is the daily chart, but if we go all the way down to the 15-minute chart, and if I bring this all the way back to where we were, so now I'm back to where we were, and I know I just said the 15-minute chart, but I meant the 1 hour chart. You can't go back that far in the 15-minute chart. But if we go to the 1 hour chart, and let's say that we realized that there was a market structure shift up here and we turned bearish. So where do we want to look for bullishness? Well, we want to look for bullishness at the previous support area down here, the one that I just laid out, right? So let's go down to the 1 hour chart, and maybe on the 1 hour chart, we could look for market structure shifts or market structure reversals back to the upside. So we could look for bullish market structure breaks to get long, to look for longs within this area. So if we look right here, we could see that the price is, continuing to go down and make lower highs, lower lows, lower highs, lower lows, et cetera, et cetera. Right here, there was a little bit, there was some consolidation, some higher highs and some lower low and some higher lows. So you could have said that right here was actually a good area to get in. But then, of course, we had this wick down or this move down followed by this move up. But as soon as this move up happened, what else happened? Let me draw this out really quickly. All right. So, and really, remember, I'm literally just looking at like the obvious levels here. I'm not really doing anything special, right? So when this happened, it created a market structure break to the downside right here. But then it pumped all the way back up and created a market structure break to the upside, right here when it broke this. And then when it came down and retraced and then expanded back up and made a higher high, this became the other market structure break, the bullish market structure break. So what can you do? Now you could look for entries because you say, okay, you identified on the higher time frame the big support and resistance areas. And then you said, once it comes back into the support area, I'm going to go to the lower time frame and I'm going to look for bullish market structure break reversal patterns. And you saw that right here. So you saw the move down, followed the wick basically down, followed by the wick up. And then you could get in on the retest of the bullish market structure. So you have the bullish market structure, and then there's a retrace followed by a continuation of the move up. So in this case, you would see this, you would see, oh, okay, we broke the bullish market structure to the upside, or we had a bullish market structure break to the upside, MSB. What do I want to do? I want to get in on the retest, and I will get in right here, and maybe I'll put my stop, maybe I'll put my stop underneath this previous low right here. So I'll put it something like this. And then daily time frame, go back to the daily time frame, or actually let's go down to, no, the daily time frame is fine. Daily time frame, what can you do? You could see on the daily time frame that we came all the way back up to the previous highs right here. So this was a big level right here. So you could have had your target be up here, or you could have had your target be right here. Either way, because this was the previous support. So previous support usually turns into resistance. So if you took your profits at a more conservative level, you would have had a 4.48 R trade. Insanely good, right? And if you would have taken your profits at the previous resistance level, you would have had a 7.28 trade. And so that is how you can use market structure and market structure breaks to get more pinpointed, more accurate, more specific entries and stop losses. And so just as a summary, what you want to do is you want to look on the high time frame charts, plot out the big support and resistance areas, and then plot out the market structure, what it looks like. And then in the resistance areas, you want to go down into the lower time frames and look for bearish market structure breaks so that you could get in and sell or go short on a retest upwards. And then you would target somewhere down, either at the midpoint or the range low or somewhere in between. And you would look at the support areas on the higher time frames. And then once the price reaches the support area on the higher time frames, you would go down to the lower time frames, look for bullish market structure breaks, aka reversal patterns, and then you will get in and you could target either the previous low, the previous high, the mid-range, or the range high itself. And that is the lesson on market structure and using market structure breaks to get more accurate and specific trades. Okay, so now that we have that lesson out of the way and you guys know more about market structure, let's do the market update. So today's date is September 15th. It is Thursday, September 15th. It is the day of the merge. The Ethereum merge has successfully completed. The beacon chain is successfully running, and Ethereum is now proof of stake officially. So let me just fix this real quick. Sorry about that. Yeah, we have the Ethereum merge, and honestly, nothing happened. In fact, the price went down. Look at this. Look at what happened. The price just absolutely tanked. It is horrific. And so this is the biggest news, the biggest upgrade to ever have into Ethereum, basically ever. And the price dumped. People are not excited. People are not buying. There is no retail buying. No one is coming to buy your bags right now. You're going to have to wait a long time. Inflation is still super high. And not only is inflation super high, but housing prices are still very high. They are coming down. However, the freaking CPI is still going up, which means that the interest rates are still going up, which means that it is less affordable to borrow money. It's less affordable for a mortgage. It's less affordable for everyday living. It's less affordable for businesses to borrow to grow. So businesses are not going to grow, and things are going to stagnate, and things are going to continue to go down. That's my opinion, and we'll get into that in a second. But I will say this is the S&P 500. I'm so pissed because this was my sell order. Right there was my sell order. How far did it come? It literally 0.14 percentage away from all of my sells. From my, I basically when the S&P hits whatever, I just sell everything, and 0.414 away. Absolutely worse. But regardless, what I'm trying to say is that the S&P 500, I think it's going to hit 3,200. I think 3,200 is in the books. It's the macro 61.8, and it's right below the previous lows in October of 2020, and this usually happens. So I don't know if I should get into this now. I'll just do this now. So this will be the S&P 500 and the NASDAQ, and then I'll go into the dollar. So S&P 500, let's look at it. Okay, reset chart. What do we see with the S&P 500? We see that since March 2020, it went on an absolute parabolic run up, an absolute tear. And we should expect a retracement back to at least 3,200, in my opinion. Not financial advice, but this is where I think we're going to go. And if we don't, we might even go lower. In fact, the 78.6 is very compelling for the Fibonacci and for the S&P 500. So I think that we will definitely reach the 61.8 and have a fairly substantial bounce off of 3,200. But I would not be surprised to see 2,800. However, once we hit here, I'd probably want to be, I would definitely want to be more long, or unless something changes, drastically changes my outlook. Because if it reaches this level, I think the macro outlook will be really, really grim, and it just won't be good at all, and everyone will be really, really scared. And that would be a really good time to go in a lot more heavily. And so that's pretty much my game plan. My game plan is to wait until the S&P 500 preferably bottoms out at 3,200, or just simply reaches 3,200, and then we get a bounce, and hopefully the correlation between stocks and crypto will still be there. And if that happens, then hopefully Ethereum, Bitcoin, and a lot of other cryptocurrencies will bounce as well from this area. So this is the main macro outlook. And I will say this though, look at this. This was the COVID low, right? So this low went below the previous low. This was during this crash, during the March 2020 crash. Back here, we had a big crash in 2018, and this crash went below the previous low, right? And it freaked everyone out. And even this right here, this crash, it didn't really actually close below this previous low, but to close below this previous low freaked everyone out. I'm looking back. This is a big crash. This is the '08. This is the crash in '08. This huge crash in '08, it closed before or below the 2002 lows. Like that's pretty bad. That's absolutely crazy, right? It closed underneath the 2002 lows. So, and also keep in mind that even if you got in at the 2002 lows, at the previous lows, on the S&P 500 here, you still would have done really, really well. Even though for a while it would have been underneath the, for about 1, 2, 3, 4, for about an entire month, it would have been underneath the previous lows. It still would have been a really, really good opportunity, a really good buying opportunity to get in down there, right? On the S&P 500. But what I'm trying to say is that when there's these really big, drops, which it looks like there's going to be a really, really big drop, price usually comes down below the previous low. So below the previous low, I guess I'll point this out right here, below the previous low. Let me get rid of that. And so if this comes down, it's like, where's the previous low? Well, honestly, the previous low is here, but that wouldn't make too much sense. The previous low that makes the most sense would be right around here. So I could see it. Hold on, where is it? I could see it coming down to 78.6 before bouncing up, because that would mean that it swept the lows right there, and that's an opportunity, or that's a possibility. So that's just what I'm saying. We're in a macro downtrend, and macro environment is absolute garbage. So I'm not really looking to do anything too much, and that is the S&P 500. Also, if the S&P 500 reaches this line, I have an alert to go off to tell me to basically sell everything if it touches this line. And so that is the S&P 500. Also, notice that the MACD is coming down, and the RSI and stochastic RSI are also coming down. So now that we have the S&P 500, let's look at the NASDAQ, because this is also correlated very well with cryptocurrencies. And so basically the same thing. Let me draw the trend line right here. So we have the high, followed by the lower high, followed by the break in the trend line right there. And so this came up to the 61.8 perfectly, followed by the rejection. Honestly, I forgot to put an alert on the NASDAQ. I put my alerts. This is the luck of the draw right here, the luck of me, right? For not being super, I guess, stringent with everything. I put the alerts on the S&P 500 right here, and it had 0.14, less than 0.25% away from my alert to go off. And I forgot to put the alert on for the NASDAQ at the 61.8, and it came up exactly to my sell price. So that's just lucky me, all right? So regardless though, let's look at this on the bigger picture here. Look at the weekly time frame. Take it from the bottom to the top. 61.8 is at $10,503. So this makes sense to me. Also, it makes sense because this is the previous, this whole area is like support resistance, right? Okay, resistance turned into support. And so it would make sense to get a sweep of the support resistance area, because I bet that there's going to be a lot of people that are buying right here, and there's going to be a lot of sell stop liquidity right here for the whales or just the big market makers to come and swoop it up. So I do fully expect a move down into this area, followed by a move up. Where to? I don't know, perhaps there, followed by a continuation, most likely continuation down there. And so this is the game plan for the NASDAQ. And yeah, I guess I'll just set some alerts to go off just in case. Okay, so now that's the NASDAQ. Now let's look at the dollar. So US dollar continuing to rally, continuing to go super strong. I mentioned this a long time ago that we just saw a breakout of a multi-year consolidation, and that is bullish AF. As long as the dollar keeps moving up, it is doubtful that we will see another bull market. And I mean, this is it. Like I've been literally told you for months now, since 2017 bull run, dollar went down, Bitcoin and cryptocurrency surged. 2020 and 2021 bull run, dollar went down, crypto surged. Now the dollar is strong as hell, strong as ever, and crypto is just taking a huge dump. So what do you expect, right? And this was the 61.8. This was the breakout of the 61.8 golden ratio plus the big resistance area. Like, my thought process is that we're going to come up to 111, which is the 161.8% retracement, or I guess expansion. But even that, like this right here is the main level right here, for the dollar. I don't see it slowing down. I really don't see it slowing down anytime soon. Let's go to the monthly chart. Check the monthly chart out. I mean, yeah, why not have the dollar come up and retest the previous highs? This is my target. This is the target for sure. But of course, we'll get bounces along the way. I think the first bounce is coming up. We're getting pretty close to it at the 161.8. But overall, the dollar is insanely strong. And Bitcoin's only going to go up if the dollar goes down, because Bitcoin is pegged to the dollar. So yeah, you just got to wait until the dollar loses its strength. And talk about strength, talk about market structure. Let's look at the market structure of the dollar. What do we see? Nothing but higher highs and higher lows. Higher highs, higher lows. Higher highs, higher lows. It's just consistent. It's nonstop. Higher highs and higher lows. You want to fade this? No. What you want to do is you want to wait until it comes into an area, maybe here, and look for something like this to form. And then you'll say, oh, shoot, we finally got a lower low. We finally got a lower high. Then you start going into crypto and you start, moving your money into more riskier assets. That's just my opinion. And based off of, what I know. So that's the dollar. And now what else should we go into? I think that's pretty much it for the NASDAQ and the S&P 500 stocks and the dollar. So now let's go into the crypto market cap. Let's look at the total, and then we'll go into the dominance levels, and then we'll go into the actual charts. All right, so let's look at the total market cap, crypto total market cap. Just remember, first in 2018, it went from $761 billion all the way down to $91 billion. The crypto market cap lost 88% of its value in 2018. 88% of its value. It's lost 74% of its value so far, currently at negative 70%. So why can't it go down and lose another 10%, make it 84%, and bring it down to, down here to $481 billion? It makes sense to me to at least hit the 2020/2021 yearly close and open and the 2018 top. We never reached that. We never got here. So I would think that we would reach here. And looking at the market structure for the total market cap, of course, it's not just been down, up, down, and now we're sort of in this range, and we're literally just in this range right here. So this is the bottom of the range. This is the top of the range. I would probably do something like this. This is top of the range. So once it comes back down here, this is where I would want to be buying. This is where I would want to be selling. That's on the monthly chart. Let's go down to the weekly chart, see if there's anything else that we can look at. Yeah, basically the same right here. Put this like this. We created a low. I mean, this is the high. This is the, if you want to count this, low, lower high, lower low, lower high, and then we're gonna see what happens. But yeah, I mean, there's still a lot more downside to go, in my opinion. So that's all I gotta say about the total market cap. Taking the fib from the top to the bottom, I did that. Damn, we didn't even get to the 23.6. It's so sad. It is so sad. Like, I would At this point, I don't know if it's too late because it already happened so many times where we like hardly got a bounce, but I keep on expecting bounces to at least first I was expecting bounces to the 38.2, never happened. Then I was expecting bounces to 23.6, and that didn't even happen. And that's like really, that's just so sad. There's no demand. There's no demand. There's like, where's the demand? There is none. And of course you want to get in before the demand comes, but like right now, macroeconomic situation going on. We're in a recession. There's quantitative tightening. I don't see the demand happening. So it's not looking good. That's all I gotta say. It's not looking good. And this, like, here's my sell order for the total too. Never even got up to there. It's crazy. So we have this, and I mean, let me check this out. If you take the fib from this top to this bottom, or I guess this top to this bottom, this did not even come up to, this came out to a weird level before it retraced. It didn't even come up to the fib. And obviously this is just straight down. This is from $1.27 trillion. It lost over $600 billion straight down. No bounce. $600 billion lost. And now we're sort of just consolidating. So right now, here's the range. Excuse me. That is not what I was looking for. Here's the range, bottom, top, and pretty much got to look at it like this. Yeah, look at it something like this. And we're in the mid-range. We're in the middle. So if it comes down to the bottom, I'll look for longs. If it comes down to the top, comes up to the top, I'll look for shorts. So this is pretty much what I'm doing right here. Make this red. There you go. Because this obviously was too aggressive to think that we were going to come all the way up to the freaking 38.2. Oh well. So yeah, this is the range, and I'm just going to be playing the ranges from now on. So we have this, and obviously this does not look good, but this is all just chop. If we go down to the daily chart, it's just, yeah, chop city. So you want to be playing the ranges. You don't want to be playing like, technically, I suppose this could be this is a support resistance flip, but we've tapped it 3 times already. And so not much to say regarding that. I would actually I would bring this up and do more like this. So, you know what? This could be considered, this definitely could be considered an area, a support area for sure. Now that I see this. So maybe we actually will get a bounce fairly soon, because on the daily time frame today, we are pretty, we're pretty low at the support range, and looking at the total market cap on the daily time frame. Let's see here. We got the breakouts and then the retest. So this is the range. We had the deviation below, followed by the move to the mid, followed back to the low. So we're at the low. If we break this, expect, honestly, I would expect all the way down here. And so that's the total market cap. And now let's look at the dominance levels. So this is the altcoin dominance levels, and altcoin dominance levels reached the resistance. The dominance levels of altcoins reached the resistance level, and now they're falling. This is really, really bad. This actually makes me want to sell like pretty much everything I have, because this level is the level where we go down from. Like this sort of represents the market. So once we hit this resistance level, we tend to go down, and we hit it, and now we're going down. So let's go down to the daily. Yeah, we made higher highs, lots of high highs, and then all of a sudden this smack of a move down, followed by a retest. That's super bearish. Yeah, that's super bearish. I expect a lot of red. I expect us to go down due to just this chart. And so that's the altcoin dominance. And of course, the Bitcoin dominance is down here, and we just did the opposite, the inverse of the altcoin dominance. So in Bitcoin dominance, we went up, and now it looks like Bitcoin dominance is at the support and going to move up. And this, of course, is the area where the market tends to crash and most money goes flowing back into Bitcoin from here. So I would definitely be getting out of alts right now and maybe getting back into them later down the road when we hit here. So let's actually just do this. Let's take the fib from the bottom, actually from the top to the bottom. Mid-range is right here. So this would be the area where I would want to get back. I'd want to get back into alts right there. And let me do the same thing for this as well. So just take it from the bottom to the top and take the fib right here. This is where I'd want to get go back into crypto for sure. So there you go. Those are the dominance levels. And let me just look at the market cap DeFi dominance. DeFi looking like crap. Let me go to the weekly chart. So top to bottom, yeah, didn't get back to the 38.2. So this is really bad. And this I haven't looked at this chart in a while, but yeah, from the top to the bottom, if this reaches here, yeah, I'm gonna put an alert in right here to get into the DeFi coins when this reaches the 61.8 for sure. Okay, so now that we have all of that out of the way, we could go into, or all that covered, not out of the way, because it's important stuff. We could go into Bitcoin. So let's go into Bitcoin right now. Look at on the monthly chart. First things first. First thing I do is I'll plot out the levels. So looking at this, looks like we had the monthly low of July and the monthly high of July. It wicked back above it, had a swing failure pattern above July on the monthly, came back down, closed down here, and then it wicked all the way back up to the 61.8 before closing all the way back down, or coming all the way back down here. And it's only the 15th, so it's halfway through the month. So we still have quite a ways to go, at least 2 weeks and 1 day. But looking at the RSI and the stochastic RSI, this just looks completely dead to me. Does not look like it wants to turn over anytime soon. You might be saying that there is a bullish divergence here. Debatable, because this is lower than here, and also it's just what do I want to say? It's not sharp. It usually divergences should look like this, but if the RSI or any indicator looks like this, just this, like that, that's not good. It should bounce pretty hard. And so going back here, we see 85%, 82%. So those were the drops for the last bear markets. So if we have the same type of drop, let's say 80, 82%, that would bring us to right around $12,000, and that would be around 82%, which would fall in line with the previous drops. And I mean, it's looking like that's where we're going to hit, and maybe we'll hit even lower than that, considering that we're in a macroeconomic recession, and we've never been in one ever. I mean, back here things were pretty good macroeconomically speaking, and we still took a dump. So now that we're in the dump in the real world, crypto is probably going to do really, really poorly. So and it has obviously. So saying that, right here, December 1st, this is the possible length of the market cycle based on the previous lengths, top to bottom. So I have this marked out as the potential bottom sometime in December. And if I go to the weekly chart, it's actually more like December 12th, because this will be 399 days, which will be the equivalent of the previous market tops to bottoms. It's just about 400 days each. So we have some time. We do have some time before we reach here. And with saying that, I think that this is a really good area to just be dollar cost averaging in, like this whole area. Like if you start dollar cost averaging in right now, and we, let's say we freaking range like this, and maybe we go down a little bit, we come up a little bit, like, and then we end up going up and making, you know, new all-time highs in late 2023 or even 2025, whatever. I mean, your average buy-in price will be right here. And even if you continue the dollar cost average, your average buying price will probably be like 30K by the time we reach new all-time highs, because you're going to be buying all of this. And so I have an account that's literally buying over $1,000 worth of Bitcoin and Ethereum every single day. You know, and so this is what I'm doing in my bigger accounts. My trading account is a lot smaller right now because it's harder to trade, and I think like the value of Bitcoin, I think Bitcoin is undervalued right now for what value it actually brings to the world. So that's all I'm saying is that, and it's not just Bitcoin, it's other cryptocurrencies too. So yeah, I'm dollar cost averaging into a couple different cryptocurrencies like Bitcoin, Ethereum, Quant Network, and some other ones. But I have enough capital to last me for over a year. So, and also I'm selling on the pops up. So even if we do get a big pop up, or even a little bit pop up to where I'm in profit, I sell and I restart the process. So it's not like I have $1,000, or let's say I have $10,000 and I put in, you know, $1,000 every single day. It's only gonna last me 10 days. It's more like I have $1,000. I'm putting in, you know, $100 every single day. And if the price has a big pump up, then I'll sell it all. And then I'll have, let's say, $15,000 or $12,000, and I'll start dollar cost averaging in that, and I'll just rinse and repeat. So that's my strategy. That's one of my strategies that I'm using right now. And so this is ETH on the Bitcoin on the monthly chart. Let's look at Bitcoin on the weekly chart and narrow things down just a little bit. So what do we have here? Let me do this real quick. Let me make this the range. I like that better. And let me get rid of this. So, okay, so it looks like we came below the 61.8. We still have a couple days, 3 days until the close of the week. But, hold on, what was that? Okay, so this is top to bottom, reached the 61.8, smacked down, and now bottom to top. 61.8 was right here, and it looks like we are below that right now, which is not too good. However, if we go down to, let me just look at this really quickly just to try to see something. Okay, so yeah, I didn't really see too much here. What I'm noticing is that pretty much it's the range from this low to this high. So I think this is more accurate of what the range actually is, just looking at the swings, because we made the low, and then we made a high, and now we made a higher low, or a swing failure pattern right here. So it's not bullish yet until on the weekly, until we break through here, but it's not, or I would say it's less bearish because we made this higher low and then the swing failure pattern below it. But there's still a lot more that we need to look at. So let's go down to the daily chart, and yeah, looking at this, we could see that on the daily time frame, it did come up to the 61.8, which was the supply zone / the buy stop liquidity right here, and then obviously just completely tanked. So yeah, a lot of sells should have been stacked in right there, and that worked out really well. And now the 61.8 is right here, and we did not really get a bounce off of it. But this right here is the bullish order block, or I should say this right here is the bullish order block. So until we break down below 18,500, technically speaking, we still are in this area where it is bullish. So it's hard to say. For Bitcoin, I mean, for the overall market, I'm bearish. But for Bitcoin, until it breaks below here and creates a lower low, or at the very least, closes below this level right here, this previous low that happened before the swing, I'm still I'd say I'm neutral. I'd say I'm neutral on Bitcoin, and I would only want to get in really if I see on a trade, I would only want to get in if I see something pretty obvious. But let's go down to the 12 hour, see if there's anything there. So we don't need this anymore because this already occurred. And so if we take the Fibonacci from the bottom to the top and we look at the entry fib trade setup, this right here is the area of the optimal trade entry. So we really should get a bounce. If we fall below 19,450, it's really not going to be good. It's going to be bad if we fall below here. So this is the low, and fingers crossed this is going to be a swing low, a SFP right here from this low right there. And if that happens, then it might signify a buying opportunity. And honestly, like this is a very significant drop so far, 13%, 14%. So I do expect a bounce. Like I would just, looking at the chart, okay, I expect a bounce because this is such a big drop. And going down to the 4 hour, we can see that there is some bullish, there's some bullish divergence happening on the 4 hour RSI, and the stochastic RSI is moving up, and the MACD, MACD could be better, but it might turn over to the upside soon. So it's not terrible. I'd probably expect something like that if it was bullish to happen, like one quick move down followed by another move up. I do think that we would see a move up, but looking at this, okay, so I do like this. So I like how it's basically printing like this instead. Actually, there's something for that. There's something like this. So I like how it's printing down like this, because usually what happens is it prints down like this, right? And then has one swoop down followed by a big move up, and it looks like that. As opposed to if this was moving up, it would be creating a bear flag, which then would have the move up followed by the big move down. And it's like, look at this, big move up followed by a big move up, wick up followed by a huge move down. But down here, it's moving down. So it's usually a big move down followed by a big move up. So that is at least some bullishness that we could see right here, which I like, and it's happening within a bullish order block. So that's good. And let me actually just I'll bring this down here. And it's happening within not just the bullish order block, but the Fibonacci OTE. So you really just have to wait to see what develops from here. You can't really do anything because technically speaking, from a market structure point of view, we had the the high, the low, the high, the lower low, the lower high, the lower low, pretty much. And now we're going to make a lower high. So we need to see something like this form. We need to see something like this form so that we could get in on the potential, reversal. Or if there is a hammer candle, like a really big hammer candle, that would be a good sign, especially if it happens at the 78.6. So this is the level that I would look at to basically try to get in. I already said that I am dollar cost averaging in, and I think the most likely situation is that we have a big wick down followed by a move up to probably right around here, 20,600, something like that. Maybe even 21.5. This has to happen first to really determine. But if something does happen, then the first take profit should be right around 20,300 area, or I'd say probably 20,150 area, because this was the high right now. And I really just need to wait to see what develops, because there's nothing that I see that is screaming to me right now, other than perhaps the fact that this was a base, And so there is demand in this zone, as you can see from this wick into this zone. So if we get into this zone and then we get a wick back up, that would be the trigger. Basically, that would be the trigger to go open up a long position for a trade. And other than that, not much else to say about Bitcoin. I do think that eventually we will clear the lows. We will clear the previous lows that happened at 17,000, back here. And so I would just be selling on the way up, to be honest. And I have a bot that sells. My other thing that I'm doing is that I have a bot that literally sells every 1% up, every 1% move up, it sells a little bit of Bitcoin. And so I basically just sold all the way up here, just continually sold. And then on this crash, on this crash down, I ended up buying back right here. So that is another strategy that you can have that's pretty hands-off. And I do that through 3 commas, which you could find in the description below. Oh, also, I want to shout out to MEXC Global. And so this is MEXC Global right here. It's the exchange where you could get a lot of new coins that aren't readily available yet. And I think I got ETHEREUM on here. It's pretty much like how KuCoin was the place to get all of those hidden gems last year and the year before and the year before and the year before. Now I think MEXC Global is probably the place to get a lot of the hidden gems because KuCoin became very saturated. So shout out to MEXC Global, and I'll have an affiliate link in the description below if you want to go in there, deposit a little bit of money, and just buy a couple things from MEXC Global. And I'll be giving out what I'm buying on here. Most of this stuff is for me to buy and hold, but I will look into trading on here also. So now that we have that out of the way, I think we can go to Ethereum. So let's head over to Ethereum and see what Ethereum is doing. Oh God, it's not doing good. So let's just go over this, okay? Okay, so let's start off on the monthly chart. And same thing as what I did for Bitcoin. Bitcoin went down 80 to 85% the last couple cycles. Well, Ethereum went down 95%, 94%. So if Ethereum were to go down 94, 95%, that would bring us down to $211. So $230 to $200 basically. So somewhere around 230 bucks. And that, I'm not saying we're going to get there, but that would line up with the drop that we experienced last time in Ethereum. And so for Ethereum right now, I have buys stacked all the way down. I'm just averaging into Ethereum as well as Bitcoin and Quant and a couple other ones, and I'm dollar cost averaging to them. As far as my trading account goes, this is what I'm looking at. We got the Fibonacci from the bottom to the top. The 50, hit the 61.8, dropped below that to the basically 78.6, and then came back up. So if we take the Fibonacci from this top to this bottom, we actually did come up to the 38.2, and we wicked above it and then fell back down. So finally, something worked out for Ethereum, or for the Fibonacci. Even though it wasn't exactly perfect, it still worked out. And yeah, we had the swing failure pattern above here, and then we closed there. That was really bad, and now it looks like September is coming down as well. And I mean, yeah, everyone already knows, or should know, September is typically a terrible month. I think like 9 out of the last 10 Septembers has been red. So I'm not expecting anything for September. However, because it is red and then October is usually green, that's why I think that dollar cost averaging is a good idea. I think like buying into the dips in September is a good idea, because in October and November and December, usually price tends to go up. I'm not saying it will, but I think it would be a good idea, not with a whole lot of capital, but with partial capital for sure. And so I'm looking at the monthly chart, and honestly let's look at on the monthly chart. Where's the next 1, 2, 3, 4, 5, 6? So this is the low, this is the high, low, high, lower, low, first lower low to happen, lower high, and then boom, lower low, and then probably, I'm guessing, lower high, and then lower low. Where's lower low going to happen? Well, this right here, I will say this right here is the This is the bullish order block for Ethereum on the monthly chart. So it would not surprise me to see the price come down to $475 because this is the bullish order block. However, at $677, that's the 88%, and 88% is usually where the institutions tend to buy. So I would probably go all into ETH here. I wouldn't just go all in and hold, but I would probably go all in and then sell on any bounce up. And then if we reach the bullish order block, that's when I think we would get a really big significant bounce. Well, I don't know. I think we'd get a significant bounce from the 88 and the bullish order block. So we'll see what happens when the price comes down there. But I'll definitely be looking at the lower time frames and looking for bullish market structure breaks or bullish market structure reversals. And so that's the monthly chart. Let's go down to the weekly chart now. So if we look at the weekly chart, what can we see? I plotted out the bottom to the top, the 50% right here. So now we are back at the midline. And so we are at the midline, and technically speaking, if we look on the weekly time frame, we had this huge move down, right? And then move up. We made our higher low, and then we broke it to the upside. So really, honestly, this right here is the bullish order block right there. So if we were bullish, this right here, this would be the level. So we have this. Let's look at the Fibonacci from here to here. It's the 78.6. So in bearish circumstances, that might work. And yeah, I mean, typically we hit the 61.8 and then come up to the 38.2, but we hit the, yeah, we didn't even hit the 61.8 actually. We just straight up, yeah, we didn't hit it. So that's a little weird, but I would, let me look at this. Let me just look at this for a second. Yeah, I would say that the bullish order block is down here. This is the higher probability play right now. But if we go down to Ethereum on the daily charts, it's probably going to be, you're probably going to get a better grasp of the situation. So of course we have the, we have this nice support area right here. So I'll just plot this out as support in green. Okay. And we're coming into the support area. This is really the last, like if we fall below here, that's bad. Because this would be, it pretty much goes like this. It pretty much goes like this, right? We have, the low, high, low, higher high, higher low, and then let's just call this the higher high, right? The high. Then we have a break in the market structure down because we broke the market structure right there. Then we had the retracement, okay? And everyone is like, okay, we're going to retrace, and then I'm going to go short. So everyone went short right here, and who knows, maybe they targeted right here, or maybe they targeted the range low all the way down there. But when we reversed from here, people were probably like, okay, well, let's continue, the downtrend. So maybe it'll come up to right here and then go down. So it came up to here, but instead of reversing and going back down and then like continuing down, it ended up coming all the way back up. So now everyone who was short right here, they're buying back right here. And then they buy back, and then boom, price comes back down and, wipes them out. So all of the liquidity from all the people who shorted right here because they thought that we were going to get rejected and make an equal high, they got wiped out, and they were the liquidity for the market makers to move the price down. So now the price goes down, and we're back at the support. So it's probably going to be a lot of people buying at this support area. hoping that the price comes back up, because technically speaking, this is the range that we're in. Like, we're in the range between 1420 and, basically 1800, 1700. So yeah, it really, looking at this, if I was a market maker, I know that there's going to be a lot of people buying right here, and I know that they're going to put their stops right here. So there's going to be a lot of buy stop liquidity right here. Sorry, I meant to say sell stop liquidity. This is the demand zone. This is going to be a big demand zone. There was this wick down here. So this is the demand zone. And there's a lot of people who will be buying here who will put their sell stops right here. So they will sell into the market makers, who will then buy up their stops and bring the price back up. Will the price come all the way back here? Or maybe it'll just come up back to here. Who knows? But this seems like the most logical, plausible thing that's going to happen. So if I had to guess, this would be my guess as to what happens. Something like this. And then I would put on so I'd probably put on a position to try to snag it up. Something like this. And what I would do is I wouldn't put my stop in the books, and I would stack my orders down, because sometimes like they send the price real low, people, because they're like, oh, people expect this. So this is what I would expect. I'd probably just start stacking in buys from 1450 down to like 1300-ish, 1330. And then if there wasn't a move back up above 1420, then I would probably get out somewhere around 1350 to 1400. I'd probably just get out somewhere around there. But yeah, this looks pretty plausible, especially considering that the RSI and stochastic RSI are in the oversold territory, and the MACD is looking, it's pretty down as well. Let's go to the 12-hour just to make sure, just to double check on stuff. Yeah, I mean, it seems like yeah, I'd be comfortable doing something like this for sure. Yeah, and so that's going to be for Ethereum. And let's look at Ethereum against Bitcoin real quick, because the dominance levels, obviously, that we went over earlier, those are looking really, really bad. And Ethereum against Bitcoin, honestly, Ethereum against Bitcoin is looking bad as well, because we had the monthly chart come up, swing into the resistance, and then fall back down. So that's not good. We have the weekly chart. Obviously this week has been really bad, and we have, high, low, higher high, higher low, higher high. If this breaks right here, then that will and closes, then that'll be a bearish market structure break on the weekly, and then we could look to short Ethereum, or just sell Ethereum for Bitcoin, or whatever you want to do in that regard. And so on the daily charts, this is the support, and it's the monthly close. So this right here, this is where I would look for longs, and this is gonna be yeah, that's the game plan for Ethereum against Bitcoin. If it falls below here and closes, look to go short and target down here. If it falls below here, comes back up, then look to go long. Yeah, I suppose. I probably wouldn't actually. I'd probably just stay neutral at that point. So there you go. All right. Sorry, I'm buying some ETH right now on my dollar cost averaging account. So things are, going, I think ETH must be going down, which it is. And that's pretty much it. So I'm also in BNB. Just a couple last things. Yeah, so the last things I want to go over are basically the fact that BNB, I want to be averaging into BNB down here. And my target right there is right there. This is just something I'm averaging into. Same thing. I love quant. Atom, here's the play on Atom. I'm going to look for this setup right here. I'm going to look for it to come down and retest this trend line once again. So I have an order placed for Atom right here because I think Atom is going to do, or it is doing some big stuff. And then Solana, I think I will just go into Solana and post about Solana in the VIP Discord, and I'll go into some other cryptocurrencies as well. I did notice that EOS just broke a very significant trend line, and now it's at the support. So if it breaks the support, that's going to be really bad. I feel like I want to put this on in anticipation of it breaking the support. That might be, I mean, that is very aggressive though. So, because there's no confirmation, but you could put this on like this, where the stop loss is above the trend line, or you could wait for confirmation, wait for it to break the support, and then simply just put something on like this, and maybe even target, the lows and take your profits along the way and just trail your profits. And so, yeah, that's going to be it for this market update. Hopefully you guys learned something. If you liked it, definitely give it a thumbs up. Leave a comment in the description below, or in the comments below, and I'll see you in the next video. All right. Thanks again for watching. Talk to you later. You're awesome. Stay awesome. Bye.